things are looking terrible this week for mining. But in February, Bitcoin hash rate continues to grow. It's growing at a slower rate, but it is growing still. So Bitcoin mining revenue remains steady even at $1.4 billion in January, and public mining companies account for roughly 30% of the network's hash rate that month. Competition among the top 5 mining firms is intensifying. After months of rapid expansion, Bitcoin's hash rate growth slowed down in January, according to the latest report from the Miner Mag. The network's difficulty saw its first decline since September, indicating that even though publicly listed companies have kept increasing their hash power, their growth isn't enough to compensate for the capitulation of other probably smaller operators. The total revenue made from Bitcoin mining remained at a stable $1.4 billion for the month. Publicly traded mining companies, which collectively hold about 99,000 Bitcoin worth around 9.7 billion US dollars, accounted for about 30% of the hash rate market share in January. Competition between the biggest publicly traded companies has also increased. The leading mining firm, Marathon Digital, retained its top spot with a realized hash rate of 41.65 exahash a second, followed by CleanSpark's 34.77. Riot Platforms, which has been expanding aggressively, is closing in with 31 exahash a second. Obviously, Marathon Digital has expanded itself outside of Bitcoin as well to compensate for that. We talked about that last week with them using or utilizing revenue from kaspa in particular to cover the minting costs of Bitcoin so they can hold more Bitcoin, which is an interesting strategy, and I highly recommend taking a look at that video if you're interested. Quote, notably, the competition within the 30 exahash group is heating up like never before. While the gap between 30 exahash tier and 10 exahash group, comprising Core Scientific, Cipher Mining, and Bitfarms, continues to widen, the report said. The top miners taking more market share is hardly a surprise, as the recent halving event has cut Bitcoin mining rewards by half and squeezed the industry's profit margin. Even with the Bitcoin price near $100,000, in such an environment, it's tough for smaller players to compete with big operators, which are already positioned to dominate the market. In fact, a lot of miners are already looking for other revenue sources, such as hosting machines for AI and HPC firms. Now, of course, that's been something that's been being talked about for a long time, is all of these miners moving from AI to HPC. If you actually talk to the large mining firms, the only one that thinks this is a good idea is Riot. There's been multiple Q&As I was there with, at the mining conference. I was also there at Consensus, where they had a big meetup with the guys from, Foundry, Marathon Digital, Riot, all those guys. The infrastructure is inherently different. So when you read these types of things from CoinDesk, it's usually a false premise, right? I wouldn't be very confident that that's actually reality. I think that's a narrative that journalists are pushing that don't understand the industry as a whole, right? You're going to have to get redundancy. You're going to have to get large internet pipes. You're going to have to get high level, you're changing the infrastructure completely. And I don't think that's what's going to happen. More what you'll see, of course, is, moving outside of Bitcoin for additional revenue. Litecoin, like script miners in general, are probably going to be the next target of a large mining farm to compensate for loss of revenue on the Bitcoin mining side, if I had to take a bet. I think we already started seeing that at the lower level. And if you're in that 10 exahash range, that would probably be the smartest move to try to catch up with the 30 exahash range, right? The report also said that mining hardware imports to the U.S. also slowed in January, a factor contributing to the stabilization of hash rate growth. However, some firms, including Blockchain Power Corp and Acrohash, have imported a significant amount of cooling infrastructure from Bitmain. Looking ahead, the Mining Mag predicts another difficulty adjustment decline in February as some smaller mining operators exit the market due to lower profitability. Now, we always have this discussion of like, does hash rate follow price or price follow hash rate, and the power law with Bitcoin and other cryptocurrencies, whether that's kaspa or so on. And if we look at overall, let's just do mining pool stats, right? Because that'll be the easiest one to click over to. You can see here we're still sitting pretty stable. We're not back over a petahash. We're still in the exahash phase. But for the past week, the Bitcoin hash rate has been relatively stable, with one difficulty drop that just happened here on the 26th. So we've had a little bit of a difficulty drop, but we did have a larger difficulty pump up on like February 10th or so on, around there. So it's not necessarily like 100% sure that we're going either way. Bitcoin tends to have, price follow hash rate, but in a big correction like this, it can definitely bring that into question. So I'd like to hear your guys' thoughts on it. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.